Good days, business and finance here at Echo Television International, and I am Rachel Tanzi. So it is the World Economic Forum week for 2024 starting today down to the end of the week on Friday, and we are seeing world leaders in participation, and we have the Vice President of Nigeria, Shettima, in attendance. Now the annual meeting of course has a team, and then we are seeing 4 different teams for this year, starting with achieving security and cooperation in a fractured world. Of course, without security, the economy will struggle. Without a structure, without cooperation, we need world leaders aligning, we need synergy, and we need cooperation. We need to see countries doing business with one another. Now we are seeing creating growth and jobs for a new era. Yes, we are definitely in a new era, and 2024 so far is unpredictable. We are seeing that our global leaders, world economy coming together to see what will it be like to create jobs in a new era. We are looking at artificial intelligence. We are looking at new technological advancement and development, and of course a threat to people's job with AI and machines. And another theme of course is artificial intelligence as a driving force for the economy and society. It's about time we start embracing artificial intelligence, because it has come to stay and it is going nowhere. So you need to know how you are going to find your space with artificial intelligence, because in as much as it might feel like a threat to employment, I believe it is going to create more room for employment. You just have to find where you fit with technology and the development and advances that are coming in this new era. And also one of the things is a long-term strategy for climate, nature, and energy. We see how so far since 2023, climate change have been finding its way into economic development. That is because without a sustainable climate, economy is going to suffer. We saw in the G20 summit that took place in 2023 where climate was a focus. We are seeing the COP28 that took place 2023 where climate change is in focus and the things that are happening to our climate. And we are seeing that in this World Economic Forum, of course, climate change is a problem, because we are looking at an ecosystem that needs to be preserved for agriculture, for minerals, for resources, for everything that we need to build our economy. So yes, we are seeing that these are the driving force in the economy for 2024, and what world leaders are looking at for the way forward. And I believe what Nigeria needs to take and embrace in this World Economic Forum for the year 2024. Now, moving on to other things that affect us solely within Nigeria, we are seeing that the stock market is getting, there is a bullish system going on for a while now, and we are seeing that in 24 hours, just in one day, the NGX is seeing a profit of over 1.6 trillion naira. That is massive, and this has been going on for over a week now, and then we are looking into 2 weeks as we are seeing that equity markets are extending weekly bullish run as investors are gaining. So in the equity market, we are seeing over 1.8 trillion naira gains, and then with the bullish run, we are seeing that, you know what, let's extend this opening from 1 week to 2 weeks as it is going at the moment now. As a result, stock market key performance indicators surged by plus 3.56% in a day transaction, with record volumes of transaction across major NGS indexes. And we're going to look at these different companies that have their shares and their stocks in the NGX. Now, according to stockbrokers, the market's position performance continued due to investors' strong buying appetite across the major market sectors, led by the banking sectors. Now, we're looking at local buzz showed that the banking index grew by 8.16% plus due to positive price management in tier 1 bank names. The market index, or all share index, increased by 2,867.31 basis points, representing a rise of 3.57% to close at 83,191.83. Now, data from the domestic bourse received that market activities inched higher Total volume and total value traded for the day increased by plus 18.46% and plus 61.77% respectively in its market update. Now we're having Atlas Portfolio Limited approximately, this is what is making in unit, 1,409.85 million units valued at 24,681.50 million naira. This was transacted in 17,144 deals. Now, as I mentioned earlier, and this gave room for our equity market to be able to last for 2 weeks, and we're looking at this bullish run going on. Now we would like to see some of the companies that were able to profit in this bullish run, because we're seeing that investors are putting more and more. Now we are seeing that from the NGX Industrial Goods Index record a weekly gain of 4.08% increase. However, the NGX Oil and Gas Index lagged behind with a weekly loss of 1.61%. So we're seeing oil and gas not doing so well, but then goods, industrial goods are performing really well. Now, among this group, we're looking at Cadbury Nigeria. It led the gainers table by 42.31% to close at 24.0 per share. That's a naira, 24.05 per naira per share. Now we have Veritas Capital Assurance followed with a gain of 39.47% to close at 53 kobo, while Julius Berger went up by 32.94% to close at 56 naira per share. Now, in as much as we are seeing that Cadbury is winning, shortly we'll look at a story where Cadbury is having to share most of his sell most of his shares just to be able to pay a debt, and this is as a result of the Nigerian market. Now let's look at other companies that were able to benefit from this bullish run, and then we have the DAR Communication, that's a DAR Communication, led the decliners table by 30.23% to close at 90 kobo. We are seeing that industrial goods are doing well. No wonder we are having Cadbury doing well. Why? For DAR Communication, of course, is not industrial goods. These are consumables that are not hard but soft products, let me put it like that, or digital products. So we are saying that they are losing at the table and declining with over 30.23% and close at 90 kobo per share. Now we are seeing Total Energies Marketing Nigeria follow with a loss. We saw that oil products are not doing that well, so we are seeing a loss of 10% and close at 346.15 naira, while NEM Insurance declined by 9.5% to close at 5.75 naira per share. So these are the companies that gained and had a little bit of a loss with the bullish run in the NGX. Now, Cadbury Nigeria is selling over 402 million naira shares to be able to settle the $7.7 million debt. Now, they have offered to swap its $7.7 million, that is equivalent of 0.03 billion naira debt owned by Cadbury Schweppes Overseas Limited for more equity, just as we have seen earlier. Now, Cadbury Schweppes Overseas Limited, controlled by Model Z International Incorporation, is a major investor in Cadbury Nigeria with 74.97% stake. In a statement sent to the Nigerian Exchange Limited, we have Cadbury Nigeria said it borrowed $23 million from Cadbury Schweppes to settle outstanding third-party loans obtained to fund raw materials import and other input costs. Now, Cadbury Nigeria said it is facing challenges servicing the foreign currency dominated loans due to persistent foreign currency scarcity in the country, where we are seeing that PNIG are closing and saying, you know what, the economic condition is harsh in Nigeria. We're seeing Cadbury Nigeria insisting to stay, but at the detriment of not being able to service their loan gotten from a bigger company, that's Cadbury Schweppes, that is being seen by Model Z. Now, we are seeing that Cadbury is saying at all costs, we are going to stay in Nigeria. However, this is at them giving out over 402 million shares of their company. We are looking at them giving now, not having, because if if Cadbury, Schweppes, the international companies, having over 74.9% of the stake of the country, now giving over 402 million shares of the country, means that they are losing percentage of ownership, and they're now going to be having over 80% of the business, not theirs, but being owned by stakeholders. Now, the liberalization of the foreign exchange market in June 2023 and attendant devaluation of the currency put further pressure on the company as the naira value of its foreign currency dominated loans increased significantly. These are all statements coming from Cadbury explaining what they are going through with the current economical situation in Nigeria. This resulted in an unrealized exchange loss of 20.6 billion and a loss after tax of 10.2 billion in dollars for the period ended 30th September. Now, these are numbers for the third quarter of 2023. Imagine or wonder what could be the struggle of Cadbury at the last quarter of 2024 and looking of 2023 rather, and then looking forward to what it will be for them in 2024. Now, Dangote Refinery has received its sixth batch of crude oil shipment. We saw that in December, it started having its shipment. It's gotten up to 5 batches of shipment, and now the 6th batch of crude oil have arrived, and of course gearing up for more production, in as much as we are seeing that other have started as a diesel and a jet fuel. We are still waiting for premium motor spirit, as it is what Nigerians are waiting for. This is what we consume daily in the country. This is what has affected the prices of good in the market. This is what is behind inflation. This is what is behind the standard of living going low. So we're looking forward to seeing if by the time Dangote will start having premium motor spirit out there, then we will see what it will mean for our economy. Already we are seeing some marketers getting access to be the ones supplying and distributing the oil in the country. Now, Dangote has said previously that the refinery can load 2,900 trucks a day at its truck loading gantries. The jet fuel from the refinery will conform to Euro V specification. The facility was also designed to meet the World Bank, US EPA, European Union emission regulation, and Nigeria's regulatory authorities emission influent norms. Now, the company started test run on the product units of the refinery. We're looking at some weeks back and receiving the final cargo of crude oil from State Energy from Nigerian National Petroleum Corp. Now, we are seeing that despite that the refinery has a 650,000 barrel per day capacity production, we are saying that it will be able to start with 375%, and then subsequently we might not see that full capacity of 650,000 barrel per day in the year 2024. It's more in the future, so we are hoping it gets to that capacity by the year 2025. Now, with this, I just hope that the government of Nigeria doesn't wait on Dangote Refinery, but it's working on every other refinery, because we are seeing that the process is going to be long. 650,000 barrel per day is not good enough for the consumption of over 60 million liters of petroleum consumed every day. So we are looking at this to be a joint effort from the government. So we need to see refineries outside Dangote Refinery up and doing. If not, it will still be a major setback in a lot of ways, because we are not even going to see its full capacity in the year 2024. Now, manufacturers are threatened by the 45.5% increase or rise in the CRR. Now, as multinational companies exit Nigeria over exchange rate volatility, economists and other investment fear that more businesses may face similar fate at the amount of bank deposits with the Central Bank of Nigeria, otherwise known as cash reserve ratio. Now, we have many other things threatening manufacturers. We are looking at the currency devaluation. We are looking at power. We are looking at inflation. And now we are looking at the cash reserve ratio, which is as high as 45.51%. Now, let's not forget that the CBN in the last quarter of 2023, precisely December, have not had their MPC meeting fluctuating. So we do not know what is the MPR as it is now in the country, what it might stand for manufacturers. And now we are seeing that the cash reserve ratio has gone as high as 45.5%. Now we are seeing that the CRR in Nigeria is one of the highest globally, or even the highest in the world. Now, this will constrain economic growth as it denies companies access to credit and raises the cost of credit. Now, citing the impact of high cash reserve requirement debit on banks' ability to lend to the manufacturing sector, they charged the new leadership of the CBN to put machinery in place to stabilize the exchange rate as well as the fiscal situation to lower the CRR and ease the debilitating impact on the economy. Now we are seeing that even if not for anything, this alone could make one company that has been hanging to want to leave the country, and we do not want to see that. Now, mandatory reserve deposit represent a percentage of the customer's deposits that are not available for use in the bank's day-to-day operations and must be kept with the Central Bank of Nigeria. The amount, which is based on qualified assets, is determined by the CBN from time to time and is non-interest bearing. So as we are seeing new regulations coming from the central bank, such as capitalization, where we are seeing that banks have to have trillions of naira to be able to remain an independent commercial bank or merge or be kicked out, we're now seeing that manufacturers have to face this 45.5% CRR. So, of course, it means bad business for those who won't be able to meet up with this cash reserve ratio. So, we are seeing that some CBN policies are not only affecting commercial banks, but we are seeing this affecting businesses. And we are looking at multinationals having to leave, or even businesses within the country that might have to close. Or while we are seeing reports showing that there are few businesses in the country that earn $1 billion annually. This is very low, well below average. And it means that we are not doing well in the business market, and we are not even up to the standard to stand in the global economy. Hoping that the CBN reviews its policies and make sure that we have businesses that won't have to leave because the CRR has gone really high. Now, our foreign reserve depletions caused LC payment to 1.14 billion naira. Now, total letters of credit is kind of what big multinationals bring into the country, and then this is from the CBN, from the federal government, where it's kind of an assurance to tell you that, you know what, you will receive your payment on arrival of good or within a period of time. Looks like a debt letter or something like that, but then the word for it is called total letters of credit. Now, between January and October of 2023, that is the last quarter, starting from the first to the third quarter of 2023, we are seeing these letters of credit amounting to 1.14 billion dollars. Now, this according to the latest data on international payment released by the Central Bank of Nigeria. We are seeing that the LC payment stood at $71.99 million in October, that is the last quarter of 2023, compared with $71.69 million in September. Just a little difference from what was paid in September and compared to what was paid in October. And we have a long way to go because we are looking at letters of credit at $1.14 billion, and we are just able to pay not up to hundreds of millions, and we are in need of 1.14 billion to be able to settle these letters of credit. Now, a breakdown of the Apex Bank data on international payment for the first 10 months of last year indicates that LC payments amounted to $107.78 million in January. That is the start of 2023. We're looking at 171.95 million in February, 269.49 million in March, down to August, September, and then in October. Now, this means that the total LC payment for the 10 months period amounted to 1.14 billion. However, The amount is 83.92 million, or 6.85% less than the 1.23 billion that the payments got up in the corresponding period of 2022. Now we can imagine what will be for 2024 if we are having over 1.14 billion being paid for the year 2023. For the economic year 2023, we are seeing that it's less compared to what was paid in 2022. But now this will increase because we are seeing that there's been a ban lifted on certain items that were not permitted in 2022. Now knowing that in full scale these items can be traded and brought into the country, we are looking at probably a higher letter of credit for 2024. But then we'll have to wait and see how things unfold for the business year in 2024 for Nigeria economy, and to see what policy will favor the economy, what policy will favor manufacturers, and of both all, what policy will be able to improve the standard of living in the country, as we are seeing that inflation on its own is not taking a break so far. And this is how far I can go on Business and Finance. See you next time.